This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, December 11th, War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 2.5 at 446 3/4. January soybeans were up 2 3/4 at 1094, and March Chicago wheat was up 1 3/4 at 531 1/4. We had a number of export sales announcements out here this morning. 264,000 metric tons of soybeans to China. That was for 25. 186,000 metric tons of corn to unknown destinations, also for 25. And lastly, another soybean sale, 226,000 metric tons of soybeans to unknown destinations, also for 25. We've got weekly export sales out here this morning for the week ending 11/13. So we're slowly getting caught up. Real solid for corn, 2,380,400. That was above the upper end of the range there for the estimates. Soybeans disappointing, 695,600. Solid wheat, 850,400. That was well above the upper end of the range there. Meal sales solid, 327,900. And we had disappointing week on the oil side with net cancellations of 13,300. Yesterday afternoon, we got NOPA Crush. They gave us 2 months, September and October. September came in just short of the estimates there, 204.951 million bushels. October, October, however, was above the estimates, 237.059 million bushels. The estimate was looking for a number closer to 234. So another solid crush number there. Fed announced a 1/4 point rate cut yesterday. There were 3 dissensions, signaling that we're on the verge of getting a new boss there at the Fed. So that'll be interesting to see how that plays out. But outside of that, Ben, kick us off this morning. Give us some thoughts. Got sales, got rate cuts. What's on your mind?
I mean, a lot of the things that you would look at and go, yeah, this is supportive. Mentioned yesterday that I felt like beans were in a test of the 50-day moving average. We were below it the previous day. Yesterday, we settled right on it, kind of. We're above it this morning. I think that's first barometer to see if there's going to be more liquidation, and hopefully the sales are enough to keep it in check. Lowering interest rates typically supportive to commodities. I think it's worth noting in my area, the river bid in Cincinnati is strong for corn all the way out through March and May, and you don't always see that. It should be really good for that area whenever there's a river pull. But I also think it tells us that the corn, last year was a big discussion about corn exports being front loaded. And when I look at a strip out that far and I see it being bid today, it makes me think that we're going to continue to do solid corn business throughout the first quarter, maybe into the second quarter, early second quarter next year. So positive things, in corn, good demand. A lot of supply. We're chewing through that. I think we're getting to a kind of a crossroads here of are we going to be able to take that next leg higher or not? It finds bids on every break, which is encouraging. Soybeans, again, purely dependent on continued export sales and ultimately South American weather. So beans, a big liquidation. I would expect some sort of recovery over the next few days. If not, people talk about the gap, filling that down below. I will go on the record as saying I hate gap trades. I think that the timeliness of them often don't jive with people's desire to go fill them. I would look at it as an opportunity to be long if you wanted to be long beans, but I wouldn't want to be short the last 20 cents. beans have a flip side of corn in that we already supply ration by planting less. And as we go throughout the season, if we continue to see sales, I think beans will be supported and ultimately probably feel that pinch sometime a little bit later in the year as supplies dwindle. 79 million acres of beans was not enough with a solid export program. So I think that how new crop beans act really has a huge effect on where corn goes for next year. So
Very good. Dustin, what's on your mind this morning?
Yeah, I mean, it's I look at that COT report. We put it in the nightly commentary last night. That was a week before we made the high. So I think Justin's right. We are near, as of mid-November, probably near record length for managed money funds on soybeans. And we really nothing materialized out of that, right? We didn't have China really fulfilling aggressively right away. So I think that was the market getting caught a little bit. I think it was well said yesterday. We did come down to kind of a trend line ratio of beans versus corn last couple of days, and we found that support yesterday. So now that we're seeing these Chinese sales, I'd like to see if that ratio, tries to hang in there. I still don't want to forget that, like, out of all the times that we've had China as a buyer in my career, going back, to 2007, it's so often that we fail to meet the lofty carryout projections that we're expecting to have by the time we get to the end of the year. We still don't know what bean yields are. We have record crush by 20 million bushels in the last crush report. I'm not necessarily hanging my hat and saying beans are just over. I do see the value of hedging. It's just, if I was to keep one product maybe a little bit more open for fluctuation, it'd probably be beans.
Thoughts there, Justin?
Yeah, I mean, you look at beans, record long. I think we'll find out, or close to it, like Dustin said, on the next number once we get caught up. It's kind of a history lesson. We flipped and got record long. The last time the funds were record long, we were at $15 beans. So, like I said yesterday, to go buy 200,000 contracts of beans, and you got to 1186, pretty impressive. That we were, so I think just shows you the massive change in ownership. And so I think everything kind of makes sense up to now. It's going to be a history lesson, like I said, once we get caught up at the end of the year, that funds got too long. There wasn't enough, enough to feed the bull at those kind of levels. So we kind of broke back down. But I agree with Dustin and Ben. I mean, I do think we are in a demand market. We have good supplies and really good demand. So, I mean, corn more so than beans right now. Now, maybe beans turns to that. I do think forced, I'll say it's 100 times, but, forced demand can be bullish at times for beans. But the big story is that there's still a lot globally. Corn's really got the story, in my opinion. If you look at global stocks, I mean, to have the kind of acres that we had and the yield, now you can argue that the yield's coming down or whatever, but either way, a massive crop. And global corn stocks are still pretty snug, relatively. So I think corn's got a story longer term. And I think it probably needs acres. I don't think it can afford to lose, 6 or 7 million. I think it's naturally going to lose 3 or 4 just because of the massive acres that we had. So if it doesn't want to lose those, it's got a kind of a job to do. So I'm pretty friendly out forward for corn personally.
When you talk about that, you talking like December out forward?
Yeah, I just think, we're at 464. So we're, call it a nickel, 6 cents below last year's crop insurance price. If beans, Ben said it good too. I think beans is kind of the linchpin to what corn does. If beans decide that they need to go up, corn's not going to like that a lot, I think, for new crop. So right now it's kind of at 2.35, the corn soybean ratio for new crop, which is the long-term average. So it's not certainly not screaming one way or the other. I think it's going to depend on attitudes going into planting, meaning, is China coming back? Is there a demand market? If you were to plant right now, you probably wouldn't lose too many corn acres out west because basis has been kind of weak. You haven't had that demand off the PNW. Now, if that were to change and things got a little more exciting in beans, I think you have a story for both corn and beans for new crop. So that's kind of where my head's at.
God, that's fun. That's a little more fun than we've been talking about.
It would be. There's a lot of ifs in there. I mean, obviously, the obvious thing would be if South America had a problem. Now, to go put a record crop down is all fine and dandy on December 11th, but a lot of things can change between now and March or Feb, really. So I think markets kind of make sense here. You look at corn's trading around the 200-day. It sells off or liquidates a little bit, but runs right into demand. And it looks like a classic demand market to me. And I think you need something to push it, like Ben said, to the next level, whether it's a South America problem or something, but the demand's certainly solid.
Yeah. So I was talking to one of our partners yesterday, and we're going to start getting, the newer products and stuff that they're releasing for crop insurance here just right close to the first of the year. So that's going to be interesting too, to see what we can do to bridge the gap from, call it January into discovery period, and start looking ahead towards that. It could be some interesting things. So,
yeah, I'm an optimist. I mean, I'm optimistic on what we can do with these new crop insurance things and where prices are and demand, what we're seeing. So I think there's a lot of opportunity here. I mean, I know that, everyone's kind of talking how bad ag is, and I guess I'm not seeing it. I think the rally we've had, big yields we've had, demand we're seeing, the crop insurance, the farm bill, there's a lot of opportunity here. So I'm actually pretty bullish on ag going forward.
Yeah, and Justin, your alma mater Purdue index was pretty high last month too. I know.
Yeah, I gave him a call. I just said I'm pretty friendly. So
yeah,
they upticked.
He just called beans going to 15 is the way I.
Yeah, that's what I heard.
Yeah,
I mean, last time funds are this long, beans are at 15. So
yeah, that's what I said for sure.
That's what you said.
Yeah.
Okay.
Yeah, that's all I heard.
Their phones ringing. Phones are going crazy right now.
Yeah.
Careful what you give Jack for audio clips. He'll put that in every morning.
I know.
Yeah,
Well, it's like the last time they liquidated, we broke $4.
yeah.
Whoa.
From that level.
Oh boy.
Yeah, we don't talk about this.
Yeah.
I wanted to add to that though too, Justin, because we did get that Fed cut yesterday, and the dollar dropped because it was a more dovish, release than expected. They're doing quantitative easing again. Gold found support on it. I read this the other day and I thought it's just like a silly headline, but it's like all commodities are going to start looking like the gold chart. And I don't think that's necessarily what I'd expect, because you still have the fact that these are, row crops, and there's a much different type of investment there. But I do think that, like, when you just go back to, like, the best cure for low prices is low prices. You can look back over 10 years and say, well, it's not that low of a price. It is when you relate it to inflation. You backdate it for inflation, and then everyone wonders why, there's like these Reuters headlines that say, oh, this is just not enough to make farmers whole. We had that conversation, the other day after this bridge payment released. It's not for a lot of growers, right? There's still many, many billions of losses projected, even with this bridge payment right now. And it may be as simple as that we just haven't caught up to inflation yet, where we finally start getting global production questions at some point. I know South America continues to undercut us. If they just have 1 year of stability on their currency, though, they're going to be importing a lot of those higher costs from their imports. So I'm optimistic too from that front. I mean, like, being in a commodity business is great when our government's hell bent on setting our currency on fire. So
yeah. No, I agree. I mean, you got, silver's over $63 an ounce. So it's at all-time highs. I mean, I'll call all those, tailwinds for sure. I mean, look at, we planted a tremendous amount of corn acres. So he had to chew through a huge supply, right? So like I said, traditional bull demand market. It's pretty impressive actually that we're holding at these levels. I mean, if you would have told us, call it 6 months ago that this would be the yield in the acres,
lost a bet.
You'd probably think you're $1 cheaper than here. So,
yep.
No, pretty impressive. And I do think also if you look at, talk about profitability, but there are guys that are profitable. I mean, there are guys that grew really good crops, did good at marketing, have storage, took advantage of carry, and they are posting a good profit. So, these like huge billions of losses, like that's not necessarily framing all growers. I think there are a lot of growers that are in a really good financial position after this rally.
Mm-hmm.
So
very good. Just coming into the open here, Ryan, but real quick, we got cash eating up in Nebraska and Iowa for cattle. Quite the opposite for hogs. Much weaker cash market so far this week. So what are your thoughts here as we start the day?
Yeah, so everybody just wants to see how the South kind of shapes up. We're $5 up from last week so far from what we've seen in the North. 225 to 228 on the board. I mean, obviously beef prices are still lower here, but we're covering a lot of ground on the future side of the market right now. I mean, it just kind of feels like you've got a lot more optimistic trade. You've got a little bit of a weather premium, I think, that we're trying to develop. Even in the back end of the market. Plus, we're just kind of holding that 40-day moving average, and we've got all this overhead resistance over the top of the market. There's a ton of gaps, and I mean, I think everybody wants to see those close at this point. So the news is still really good, and it does kind of feel like after the rate cut yesterday, I do think there is a little bit more of macro interest in a lot of these commodities, or at least will be. I mean, if we still think that interest rates are going to see further cuts. So this could still just kind of extrapolate or exacerbate the currently kind of long managed money, I think, in the livestock markets in general, but we'll see how that kind of pays out. On the hog side, yeah, you just can't get any support in cash right now. It just feels like we're in the dumps. I mean, production levels are just astronomical. Weights came in yesterday up 1.3 pounds. So we just got heavy weights. We got heavy production right now. And it's been kind of an albatross. I think just with December expiring tomorrow, you got February's up in kind of the low 80s. I mean, we got to see some cash support here. And I think just seasonally, I think at least the way the futures are performing, that optimism is getting pushed out into the April, into the June. You got June's back up to $1 again. So I think we are just kind of seeing the longs just a little bit of a flight to safety further and further out. But right now, there's not a lot of good news. Cash down $1.38, belly's down 362. So there's not a whole lot of good news right now. Maybe we get a little bit of a macro buy, but aside from that, just waiting for some better cash news here.
Very good. Appreciate the update there, Rye. Just came into the open. We got March corn up 2 3/4 right now. 447 1/4 is the last. And Jan soybeans are up 2 1/4 at 1093 1/2. And March Chicago wheat's up 2 1/4 at 531 3/4. Tomorrow is Friday. We will have Fun Fact Friday, so be sure to tune in. You never know what you're going to get there. Also, we appreciate everybody that tunes in on a daily basis and supports the show. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.